LLPA changes. Borrowers with lower credit scores and lower down payment get a better rate and more lender credit? Hey there! Are you planning to buy a home soon or looking to refinance your mortgage? Then, you need to know about the new Loan Level Pricing Adjustment, or LLPA changes that are coming your way in May 2023. In this video, we'll talk about what an LLPA is, the changes you need to know about, who benefits from them, and which loans and lenders are affected. So, let's get started. Firstly, what is an LLPA? Simply put, it's a risk-based fee assessed to mortgage borrowers using a conventional mortgage. It varies based on loan traits such as loan-to-value, LTV, credit score, occupancy types such as primary usage or rental, and number of units of the subject property. Borrowers often pay LLPAs in the form of either higher mortgage rates or higher closing costs. Usually, people with better credit scores and higher down payments are rewarded for better mortgage rates since they represent a lower risk to lenders. Now, the new policy from Fannie and Freddie totally changed what we used to think. Now, let's talk about the changes starting in May 2023. These changes only apply to loans guaranteed by Fannie Mae and Freddie Mac, which are the two big institutions to which most banks and mortgage companies sell their conventional loans. Other loans like FHA, VA, or jumbo portfolio loans are not affected. It's a bit complicated, and borrowers usually won't see the adjustment chart when applying for the mortgage, but it will reflect on the rate you lock based on what category you fall in. When looking at the chart, let's say a credit score of 740 used to be the perfect score, and a 20% down payment used to be the best scenario, but now borrowers are required to hit the adjustment of 375%. That doesn't mean your rate is 375% higher, but means you will have to pay an additional discount point cost if you don't want to increase the rate. How much is the additional discount you will have to pay? Let's say for a mortgage of $300,000, and a 0.375 point discount charge is around $1,125 in dollar amount. However, if you look at another borrower who also put in a 20% down payment, but with a lower credit score of 680, there are no additional discount point charges. You will think that's unfair, but that's how it is being applied now. Simply and easy to see who benefits most from these changes. People who have lower credit scores, such as 640 or below, and with little down payment, like 5% or even 3%. As you can see in the chart, you can clearly see if the credit score is below 640, and only put in a 3% down payment, and usually in the past, the mortgage rate will be hit the big time with either a very high rate or very high closing cost. But now instead, they give you a better rate, and if you don't want the better rate, and they can even convert it as lender's credit to help you pay for the closing cost. In the chart, it shows they give you a 1.75% discount point credit, and for a loan amount of $300,000, and that means $5,250 lender's credit to you. How amazing it is that something as a loan officer for 17 years, and I've never seen this pricing adjustment before. Another strategy for getting a better rate and pricing is one possible solution that homebuyers can use to take advantage of the new changes by lowering their down payment to reduce the interest rate, and then paying down the balance after the loan is closed. It takes about 1 to 2 months to set up your new mortgage account, so you will need to wait until your mortgage account is set up so you can call and request a paydown on your mortgage balance. The loan level price adjustments are expected to affect different scenarios, and another big hit and adjustment very important is debt to income, DTI, above 40%. If a borrower's DTI is over 40%, and there is a 0.375% discount point charge. Let's say, your loan officer quoted you the rate, and after your file is in and with full documents, but when the underwriter reviews your file and adjusted your DTI to 41%, and you get hit with an additional discount point charge of 375%. That's $1,125, additional closing cost for a loan amount of $300,000. Therefore, it's essential to submit a full application when shopping for a loan, as lenders will have to consider your debt-to-income ratio before quoting a rate. It's important to note that the changes to interest rates for conventional loans are likely to be significant. Homebuyers planning to purchase a home using a conventional loan should pay close attention to these changes for their best benefits. If you found this video helpful, don't forget to like and share it with your friends. And, if you have any questions or comments, leave them down below. Or join our Facebook group, the link is in the description below. Thanks for watching. Clare Lynn, Senior Mortgage Professional, NMLS ID number 299,165. Your Best Home Rate LLC. We care about you and your loan.